Welcome to the Northhaven market wrap for the month of February 2017. Well, the shortest month of the year has provided some fairly decent returns for share markets overall. And globally, most markets were up during the period. The US particularly so, recording a gain of around 3.7% for the month. European markets were relatively flat though. Here in Australia, we were somewhat in between, recording a gain of around 1.5% for the month. This positive performance here was largely driven by the banks, which performed fairly strongly. CBA, the lowest performing at around 3.5%, and ANZ ANZ and Westpac both up closer to 7% during the period. Resource companies were fairly mixed. The big resource players, BHP and Rio, were actually down a reasonable amount after some fairly strong performance late in 2016. February generally is a fairly eventful month. It's one of two opportunities that companies have through the year to give investors an update on what's actually occurring within those businesses. So we've had this semi-annual reporting season, and as is always the case, companies that have issued guidance throughout the year tend to either exceed the guidance, meet it, or miss that guidance. And we've seen some of each of those results during this reporting season. Thankfully though, most of the reports have been profit upgrades. In fact, when you look back at this reporting season and compared to recent reporting seasons, this reporting season has been the most positive that we've had since 2010. Now this reporting season hasn't certainly all been good news. We've had a number of negative results, particularly from smaller players. And this trend has caused some sector rotation. We've seen a quite clear move away from smaller companies. Even those smaller companies which have tended to do relatively well have seen selling activity, and a lot of this selling has gone to fund larger cap positions, notably the banks that I mentioned earlier, but also companies like Transurban and CSL have benefited directly from that. Smaller resource companies though bucked this trend and tended to do fairly well. A number of these companies are experiencing very strong revenue gains as commodity prices have firmed significantly, both iron ore and oil, and these companies have been extremely strict on managing their costs. So an increase in revenue has led very quickly to an increase in profitability. And that really is a key for us with looking and assessing opportunities that are around at the moment, particularly in the small company space. Those companies that have been sold down, the question for us is how systemic are some of these issues that have led to these sell-offs versus how many are shorter term macro impacts which should work themselves out over time. So we're currently combing through results, trying to identify stocks that have been oversold or stocks that have the growth that's available to them in the future not yet priced in terms of market pricing that's applied to these companies. While macro factors are out of our control, the one thing that we can control is the valuation that we're prepared to pay for businesses. That essentially is the market wrap for the month of February, and we'll see you next time. Thank you.